Good morning, good afternoon, good evening from wherever you're tuning in from in the world. This is your host, Daniel Vesper, or as many of you know me, 8-inch Wick. And in today's lesson, our topic of discussion will be institutional candles. Some key focus points we'll be looking at are what is an institutional candle, identifying institutional candles, and how to use an institutional candle. Have your pen, paper, and trading journals ready? Let's get into it. Alright guys, so what is an institutional candle? The easiest way to break this down is an institutional candle is going to be anywhere in the market where an institution has played, okay? So we know that institutions, they play with large amount of volume. So generally on the higher time frames, anywhere you can identify a wick or a big bodied candle is generally where you're going to notice that an institution has played, okay? This is where a large amount of volume has moved in the market, causing the price action that you see. Now, as you drop down into lower time frames and identify some wick areas, oftentimes you'll notice they turn into bodied candles similar to these, right? You're identifying the same thing over and over when you drop lower. Let's just peep this area right here on a lower time frame. So as you can see, when we drop down into a lower time frame, that area that was once a wick on a 15-minute chart is now bodied institutional moves, right? You can see on the other side of equal lows, they swept down, capture liquidity, and have began marking this up now, okay? So how can we take advantage of institutional candles? How do we enter? How do we exit? What is the point of identifying institutional moves? So this is actually a crucial part to your analysis because you want to be able to first identify where the institutions have played so that you can find your entry and exit points, okay? Now we know top-down analysis, we're always going to begin on our higher time frames. To identify, like I said the first time, we're going to be looking for anywhere where we have big-bodied candles and anywhere where we have those wicks. We're going to identify those areas and to begin dropping down into lower time frames to see where we can find our entry and exit points based off of those institutional moves. So let's go ahead and take this first area that we've identified. Okay, we're going to go ahead and break down an institutional liquidity capture on the other side of equal highs or equal lows. So dropping back down into our 15-minute chart. So looking at this area once more, I really want you guys to pay attention to the price action and the institutional movement as you begin dropping into these lower time frames. So like we discussed already, this was a high volume wick on our 4-hour chart, right? I want you guys to really understand what is occurring within an institutional candle, okay? So we understand in order for the institutions to come in and move large amounts of volume, they have to take a sell to buy and a buy to sell, okay? Now what exactly does that mean? Well, we see this institutional move here, right? We can identify where the institutional move opened. This was the open of that candle. We can see the large volume behind it. So what actually happened is this institution came in, they took a sell position, right, at 133,694, around that area, driving price down so that they could take a better buy opportunity. And then you can see the volume move back through that entire movement, right? So it goes back bullish. Okay, one thing I want you guys to understand is I'm personally not looking to execute on that first institutional movement. Generally, those long wicks are identified on the other side of equal highs or equal lows. So this is considered a liquidity capture. There are resting orders lying down in here, right? And the institution is shoving price down to capture those positions, take their positions, and then move price away from it. I'm patient in the market and I'm waiting until they come back and clear up the price action that they have now created. So what exactly does that mean? How do we take advantage of this? How do we enter? How do we exit off of these institutional moves? So after you've actually identified the institutional move, the easiest way to actually come in and find a position based off of it is to drop down into your lower time frames. We've identified the volume on the 15-minute chart, but we remember, guys, we're focused on precision in the markets, right? So as we drop down into a 5-minute, we can see, let's scroll back into that area real quick. I know we're about to approach it. There it is. Okay, so what we're actually looking and identifying. The first thing absolutely my eyes are drawn to is this area right in here. Okay? We can see that the institution set the move and began running away. Okay? Now, one thing I want you guys to realize is first, you can identify the actual bottom of the position and you can draw that out. So if you're actually looking at the down move before the up move and identify this candle here, you can look to take a position, okay, at the open of the candle, which is at the top of the blue, and you can see it wick directly down into it, up into the 50% or the bottom, right? With a stop directly below the low. You can see that's going to be about a 5 to 6 pip stop loss, right? That would have been the first position that we were looking at executing. Now, say that we actually missed this one, okay? Say we weren't paying attention at this time. That position's already taken place, and we're somewhere up in here now, right? The second thing, like I said, my eyes are drawn to is this area here. Why? Because it's an interruption as we began that bullish momentum. This is, again, where another the institution came in again, and it drove price back down, okay? They're clearing up the unhealthy price action. One thing I want you guys to realize is these institutions are coming in with these large amounts of volume, and it's creating these imbalances in the market. They have to bring price back to clear those up. This was an imbalance in the market as we progressed up. They came back, they cleared it up. Imbalance in the market, what do we have to do? We have to come back to those areas, okay? We've got that high volume candle here, right? If you take and you identify this high volume candle from wick to wick and you note the 50%, you can look to execute at the 50% of that candle, okay? With a stop, of course, below the low. We know that as they're marking up these charts, that as long as price action is healthy, we shouldn't come back to those areas. All of this price action down here is healthy. We came down, we set the low, okay? We came back, we're mitigating out. Same thing here. We come back, we trade about 50% of the candle, we move away, right? All of this price action in here is now unhealthy. We need to come back and trade back into it to clear it up. We can see that we trade, if we were to take an execution at the 50%, stop below the low where the healthy price action is. We shouldn't come back into that since it is healthy. You could have executed at 50%. Again, stop below the low, so that position could have worked as well, running price away from that area. Okay, so if you miss the first opportunity, they give numerous opportunities throughout there before finally taking and running with the position. Guys, you just have to be able to identify this on the lower time frames, get down, work your price action into those 1 minute charts. So you can see how easily it is to like follow as they're marking up the chart. One thing I want to go over with you guys too, back to the higher time frame real quick, that 4 hour. Okay, so let's say that the institution has already moved price. Okay, let's say that they've already set the bottom and they begin moving away. This area right here, right? Big bodied candle. So let's first start off by identifying this big bodied candle. We're going to take them, we're going to highlight that out. So as we drop into lower time frames, we know what area we're looking at. Okay. We came down, and what we're doing is we're mitigating out of these institutional moves here. We can see this was, again, an institutional move down. We ran away. As we identified that one area, when you drop down into lower time frames in here, you're going to be identifying the same thing. This was the mitigation from there. We did the same thing, came down below our equal lows, liquidity, okay? Set that bottom, and you see the strong volume behind it now. So now that the volume is identified, we're going to drop down into lower time frames and see where we can actually take a position, okay? So getting into the 1 hour chart, here's that same exact movement, okay? The easiest way to take this, just like we said earlier, go ahead and clear this out for you guys. We're going to do the same thing, our Fibonacci level, and we're going to take our Fibonacci from wick to wick, okay? Remember, guys, if you're looking at one institutional candle, just one institutional candle, full bodied, you're doing wick to wick. You want to include the full manipulation of the move, okay? Now, we're going to take them, we're going to note that 50%. And again, we can see, of course, there's our execution. Now, in order to actually find a stop in this area, I generally personally drop down into lower time frames to figure out what price action within this is healthy and where I can run the tighter position. Okay, so I'm going to drop down now to show you guys on lower time frames how I would find my stop on this actual execution. All right, so from our 1 hour time frame down to our 15-minute, we can see as they began running away, okay? We broke out of the relative structure. We're running away now, and you can see that they're driving price up and down to clear up the price action. First things first, this is our 50%. If I'm looking to execute it at 50%, our stop should be, again, below the low. Okay, so on our 15-minute chart, this is where the low is, but we're going to continue dropping further and further down to get that precision in there. So scrolling back now on our 5-minute chart into that area, again, we're going to look for the same thing. Now we can see this is beautiful price action right in here. An institution came up, drove price right back down to, again, clear up the imbalances in the market. Everything below here is healthy. So this, of course, is going to be our relative stop so far. Now we can drop down into a 1 minute, of course, to get more precision. But we can definitely see the institution to begin playing here. There's that 50%, which lies directly among the top of where they took that short position to drive price down. We know that they have to come back into that area, of course, to break even on that. Okay, so now that we've actually got our entry determined with our stop as well, one thing I want you guys to realize, I'm not looking at executing immediately when it gets into that area, okay? So when it starts approaching that area, that's just my POI. That's my point of interest. I'm going to watch price action and how we react when we actually get there. So scrolling over, okay, looking at the relevant price action down in there, you can see, and we trade directly into that. We have a strong institutional movement down into it. One thing I want you guys to realize is, again, I'm not looking to execute directly at this. Okay, I'm looking until we set the bottoms and begin running away. Again, you see another institutional movement within here. You can see that we come. If we note the down move before the up move, here's that down move again before the up move. And you can see that we again trade directly almost to it, right, to break even and run away. I personally would be looking to execute one. You could do the mitigation of this with a stop below the low. Two, you could execute here with a stop below the low. Or three, as it ran away within this, okay, there's that imbalance candle. Stop below the low. You could even come and execute here, right? Your stop loss would again be moved down to about that area because that is the healthy price action. So that could be another position. All they're doing is walking the price action up and down, okay? Walking it up and down, you have numerous opportunities before it actually does the movement. So again, jumping up to our higher time frame once more, right? As we come into the markets, like I said, the first thing we're identifying is big bodied candles, okay? And then our wicks on the other side of equal highs or equal lows. Wicks even can be where they've come and cleared to 50%, right? Now look again, just even in this price action, guys, your eyes can be drawn to it over and over. What do we have within this? Our down move before our up move. Let's note that down move before the up move, okay? This is a higher time frame, so of course you drop down into lower for more precision. But even just identifying this down move before the up move, draw it out, stop below the low, right? You could have ran that position as well. That would have been the mitigation out of here. They're breaking even on the position that they once took in the past. Notice again how when we run away, we trade back down into what would be about the 50% of this institutional move again. If you were looking to execute there, 50%, stop below the low, you would drop down into your lower time frames to find the precision just as we went over. This is occurring in the markets over and over and over, guys. You have to be able to drop down into those lower time frames to be able to properly identify it. Go back, back test, find those big body candles, Okay, find the institutional movement. Just look for volume in the market. As soon as you pull up a price action chart, the first thing you should ask yourself is, where's the money? Where's the volume? Where are the institutions playing at? And then break down into lower time frames, find that precision, find your entry, find your exit, and document your positions in your journal. Everything should be documented. We know this. We know that, as a professional, we should be coming in and taking it seriously, and every position should be documented along with our emotions, as we're going to discuss in our risk management course. So again, guys, institutional movement, identify your big body candles, your wicks, and look into those areas on lower time frames. Look for where they're mitigating out, okay? Just ask yourself where the volume is and where the money is resting. Look for those 50%. Look for the mitigation out. Stops below the highs or the lows. So we've gone over institutional candles, how to identify them, and how to use them to your advantage. Like I said, go back and back test. This is your host, Daniel Vesper, or as many of you know me, 8-inch